Welcome to the Nephology podcast. I'm your host, Joe David, and I'm the founder and CEO of Nephos Group. On this podcast, we talk to founders, innovators, disruptors, and entrepreneurs from all across the globe who are building in Web3, technology, and finance. And if that's something that you're interested in, please hit that subscribe button to make sure you don't miss out on any of the latest episodes. Now on to the next episode. Hello everyone, welcome to the latest episode of the Nephology podcast. I'm really excited and delighted to welcome Mouloukou Sanoh today from MANSA. How are you?
Very good, thank you so much. It's an honor and a pleasure to be here.
Thank you so much. And it seems like you've got a lot going on right now with everything and the business. So I'm really appreciative of your time, and
thank you.
I think a lot of people are going to get a lot of value. So why don't we start off, I guess, with who you are, where you've come from, what your background is, and what's brought you to where we are today.
Yeah, definitely, will do. That's a great question. So my name is Mouloukou. My parents are from Guinea. I'm from Holland. Due to the nature of my dad's job, I had the opportunity to live and grow up all over the world. So I was born in Guinea, moved to Holland when I was a child. I then moved to China. So I lived in Beijing for 8 years. Know China like the back of my hand. It was one of the greatest experiences of my life. Then lived in Belgium. Then I moved to Hong Kong. Studied Chinese history, which is quite surprising.
Wow.
Yeah, and then afterwards I worked for a very small boutique investment bank called the Everest Ventures Group. At the time, we were one of the only boutique investment banks doing crypto deals. So we helped. So I worked on a Telegram deal. We did like Animoca, so on and so forth. Then afterwards, I worked in private equity. Worked for a global consumer growth equity fund, invested in anything that had a consumer-facing side to it. I looked at cultured meat, I looked at shoes, I looked at wine. Our best deal was BioNTech. So we did BioNTech right before they went public, right before they did all the like vaccines and stuff.
Yeah.
So that was a really great experience. I then left that firm and I did two things. Number one, I worked for Adaverse, which at the time was the largest Web3 focused fund on the African continent. I was an investment manager there. At the same time, I was a co-founder of another startup called Cassava Network. It was essentially a growth engine for Web3 companies to onboard Web2 users. Like that went pretty well. We scaled it to, I think, around like 1 million wallets. And then I left to start MANSA 2 years ago.
Wow, so pretty good journey to today. You've had a lot of experience doing a lot of different things, I think. And what then, I guess you were obviously working at this investment bank and doing deals within the kind of crypto space, but what attracted you to, crypto blockchain as an area to work on? What was it the first thing that made you, that we've all had that light bulb moment in this space. Like, what was it for you?
So, like, to be completely honest, I stumbled upon crypto Web3 like by mistake, right? So I remember I was in my final year of uni. I had to take an extra semester because I had to catch up on some credits. And there was this gentleman called John Patrick Mullen, who is actually the co-founder of Mantra. I had followed him for a while because at the time, I was in college in Hong Kong. I wanted to get into investment banking. And John is actually the first foreigner to work at a Chinese investment bank. So I was following him on LinkedIn, I was messaging him, and then I remember one night I was in Belgium and I was just applying for different internships, and I see John wrote, I'm back in Hong Kong and I've started this crypto startup. I didn't know what it was. So I messaged John, I'm like, hey, I have an extra semester and I've got so much time. I would love to, see if it's possible like to get an internship. So I went, I met John for the first time he gave me an internship, right? And literally like the rest is history. So, and it was quite crazy. I remember like Ethereum and at that point was like, I think like $200.
When was it?
This was like 2018.
Okay.
Yeah, so Ethereum was like at like $200 plus. This was during the whole like ICO boom and bust, right? But what really, was a light bulb moment for me in everything was when I realized the transformational nature in terms of payments, right? And I personally myself, I have a vendetta against Western Union because the thing is that my parents used to send me money to Western Union, and every time I would think I would get X amount. But whenever I get to Western Union, sometimes I'd arrive 1 minute late and the lady would be like, I'm sorry, the machine is closed, you can't get your money. The other times when I would arrive early, they would remove so many fees, and then what I get would barely like be like anything left, And that was at the same time, when there was when USDC and like USDT started like getting like prominence, and like that's when I myself like started doing all these like crypto transactions, and at that point I knew that this was revolutionary. And I always knew like that I wanted to start something in payments, but I just never knew exactly what or like exactly how, right? Like I always had it in the back of my mind. So yeah, and like things started. Like like just got to know the space more, and like the real like inflection point came like I guess like 2 years like ago, like when I left my previous startup, and I just looked at the payment space in general and decided that right now was the right moment to essentially launch MANSA and to basically, as our tagline says, transform the way that money moves.
Yeah, amazing. So I guess that's a good lead into then what MANSA is and the problem you guys, I guess, are solving.
Yeah. So essentially, if you want to understand what MANSA does, like you need to understand how international payments currently work. Currently, right now, that international payments, especially cross-border payments, is based on a process called pre-funding. If I am a financial institution in, let's say, the US and I want to send money into the UK, I must keep money sitting with my correspondent bank, so then whenever I want to do a transaction, it's instantly debited. Money doesn't move instantly as we think it is. SWIFT is just a messaging system. SWIFT doesn't actually transfer the essentially value. That's why you have T+1, T+2, T+3. The way that banks and financial institutions or even fintechs like Revolut get around this is by keeping money in different places around the world, which they seek to serve, and then whenever there's a transaction, they can take the money for that. So there's currently $4 trillion locked in all these different accounts across all different levels of like financial institutions. Now, think about it, especially when you specifically think about cross-border payments. That's why it's really a duopoly between Western Union and MoneyGram, because they have the balance sheet like to be in all these different places. 99% of the market lacks liquidity. Yeah. They cannot scale, and hence why they can't compete. And because you sort of have this monopoly between Western Union and MoneyGram, specifically in emerging markets, that's why the fees are so high. Like the World Bank estimates that to send money to Africa costs 10%. Latin America costs like 7%. Wow. Southeast Asia costs 5%. And these are countries and regions in continents that remittance is a lifeline. For example, on the African continent, you get 60 billion. India, for example, you get 100 billion. Latin America, you get hundreds of billions. So if you just take 10, 5, 6%, you have billions of dollars in fees that, like these poor consumers, and mostly it's migrant workers sending back funds, right? So essentially at MANSA, what we do is we work with large payment companies across the stack, from B2B payments to remittance to virtual card providers to people that conduct on and off ramp, also to FX companies, and we give them the necessary liquidity that they need so they can instantly close their transactions. So what happens is that, for example, let's say there's like the same transaction between the US and the UK. Let's say it's $1 million transaction. We would pre-fund that $1 million in stablecoins to the payment company based on the transaction that is happening. The payment company would settle on behalf of their client, and the payment company pays us back essentially the next day. So what this does is, number one, they don't need to use their own balance sheet. And number two, they can now do much larger transactions, and they can close their transactions instantly. To date, we have done over $150 million in payments across Africa, Latin America, Southeast Asia, of which $300 million of that is on-chain. And on average, our customers increase their revenue by 30% because now they're able to do many more transactions, and the transaction volume by 40% because they're able to do much larger transactions much quicker as well.
So are you mainly focusing on the payment providers themselves rather than the direct businesses?
Correct.
So, ABC business that's, exporting goods in Africa, you're not dealing with them directly, you're dealing with the payment provider and giving them the ability to serve more people or more companies.
Exactly. Like, because they're the ones that can handle the flow, right? Because I think it's like, especially when you think of, because for me, the most important thing is scale and is impact. So how do you impact the market as quickly as possible is by working with those people that handle the most flows. That's with the payment companies.
And I guess this problem, if you want to call it that, liquidity problem, is fine if you're doing maybe UK GBP to US dollar, because there's a lot of flow, there's a lot of money around. But if you're doing some, kind of more unique currency, take Guinea for example, doing a unique currency that, there is flow, but there's not enough flow. I guess having the the kind of the liquidity for those people is much more difficult, right? So whereas by using stable coins, you eliminate that problem immediately.
100%,
Yeah.
100%. But I think, I think it's also like important to remember that stable coins are not a magic bullet. What stable coins do like really well is the ability to send money super quick.
Yeah.
Right. So for example, and all you need is literally like a mobile phone. And in many of these emerging markets, you have what? You have I think, and please don't quote me on this, but last time I read is you have one bank per 100 people or something. Right. So it's impossible to think that, we can build all this financial infrastructure. But technology has enabled us to leapfrog that, right? So all you need is just a phone. And if I have a phone, I can get a wallet. And in many of these places, because of the need to essentially leapfrog the lack of financial infrastructure, mobile money is actually the predominant form of sending and receiving money. For example, in Kenya, M-Pesa, which is like a super app like WeChat, handles 90% of the GDP of the country. In China, you have WeChat. In Indonesia, you have Grab, and in like Brazil and Latin America, you have things like Nubank, right?
Okay.
So these people already have the propensity of using their phone as the bank. And if you have the propensity of using like your phone as the bank, there's really no difference between the mobile money that they send and the stable coins that they use. It's just essentially digital dollars. But as I said, it's not a magic bullet that, okay, yes, it makes sending transactions back and forth much easier, but you still need to have enough liquidity on both sides to be able to seamlessly like do a transaction. Because if I have 10 million USDT, but I can't go into Kenyan shillings, then it doesn't help me solve my problem, right?
Yeah, true.
Like vice versa as well, right? So then like what MANSA does is like we make sure that there is that seamless infrastructure that fintechs can use to seamlessly go from local currency to stable coins.
Okay, so as an end user, so as the individual in Kenya that is remitting funds back and forth, whatever way. And obviously, where we are in the UAE, there's a significant, 90% I think are expats here. There's a significant amount of outflow of capital, if you like, to other jurisdictions. How does what's the benefit the end user is going to see here?
Lower fees.
And speed, I guess.
Faster transactions, lower fees, faster transaction. The end users, and like the beautiful thing like about this is that this is completely abstracted from the end user, right? Like the end user like doesn't even
they don't need to do anything
to know what's happening, right? So one of the companies that we funded for a long time, like whose transactions we funded for a long time, is one of the largest virtual card providers on the African continent. They have like 1.3 million users, and when we were looking at all the transactions, it was so wonderful to see, right? Like people were paying for their visas, people were paying for their Netflix, people were paying for things that they previously couldn't because of lack of dollars, right? So there's actual real life trickle down impact that is happening as well, like which is like amazing to like see.
Yeah, I mean that's incredible. And so on the fees then, obviously we're talking high level here, but what would people traditionally pay through a Western Union or someone like that versus what would you be aiming for them to be able to pay at this level?
Okay, so like our goal is that, so in order to understand why Western Union can charge these fees, it's purely because, number one, it's because of speed, right? Because I know if I go to Western Union and I give the money right now, on the other side somebody can pick it up instantly. And then also because of the number of locations they're in, right? Like Western Union is in some islands in Indonesia, right? So like that's why people are willing to like pay that premium, right? So like it's anywhere from like 5 to 10%. But the companies that we work with, all the payment providers that we work with are charging like 2% per transaction, right? And so it's 50% less than like Western Union. Minimum, right? Exactly. So then like we are trying to keep the fees at like with our partners at the 2 to 3% range by providing them the necessary like liquidity, so they don't have to increase their prices essentially, right? So like we're aiming for like 50% reduction in like to the fees that they like typically pay.
Okay, and I guess then as well, not only is the consumer paying less, but they're getting it quicker.
Correct.
So that is another, you'll get it normally when you pay less, it takes longer, or if you want it quicker, you pay more. But in this case, what we're doing is, that pincer movement, we're bringing both of those pain points closer to So people, and I'm not asking us to comment necessarily on Western Union, for example, but like, this business model, do you see someone like Western Union going, look, we need to get into this because our margins are gonna get tighter and tighter as this happens? Or do you think they're gonna go, we're so big, we don't really care, we're gonna carry on as long? Do you see what I mean? I'm not talking, I don't mean Western Union specifically, just in general, the incumbents.
I'm not a payment company. To be honest, no, I don't think so because they just don't want to take that credit risk, right? Number one, it's not their business. Like, they don't want to take that credit risk, and they wouldn't want to serve other customers, right? Like, why would they serve the competitors?
Yeah. Yeah,
right?
true.
Because like we're actually helping their like competitors, right?
Yeah.
Maybe
okay.
Western Union, and I know that Western Union is actually using stable coins like themselves.
I'm sure, yeah.
Right? So, but then would they serve other customers? Would they take that credit risk? No, because we're like at the end of the day taking credit risk, right? Like we're taking huge credit risk, right? And
so how do you manage
that? That's to risk management, right? Like I have a fantastic like risk management team. I have a fantastic legal team, and then also like if you structure the transaction, if you structure the pre-funding in such a way, and if you build the necessary infrastructure, you're able to reduce that to zero.
Yeah.
And that is essentially what we are slowly like working towards. But like thus far, right, it's essentially the fintechs need this because they need this to grow. So as I've mentioned, they on average grow their revenue by 30% and the volume like by another 40%, right? So, and if you also think about this, payments don't really default necessarily. It's only really if you have bad actors.
Yeah.
All the clients we work with are licensed entities in the UK, in the US, in jurisdictions where if you don't even do your like AML, you get $100,000 fine.
Yeah.
So
and I say this to people all the time, right? You can mitigate risk as much as you want, but if someone wants to defraud you or steal from you,
do it.
There's only so much risk mitigation you can
do.
So like you say, unless they're a bad actor, which sometimes is very difficult to manage, you don't expect people to default on credit, etc. So on that note, I mean, obviously liquidity for you guys, I guess, is one very important thing. You need to be able to have liquidity, right, to be able to facilitate this. So I guess is this where Tether came in with the investment round to support you guys, and maybe we can talk about that specifically. So Tether invested $10 million, was it?
Correct. So the $10 million did not only come from Tether. So we had $3 million in equity that was led by Tether. The other $7 million came from, like, we have a great network of family offices, hedge funds, quant funds, and alternative like debt investors that we work with that provided the other $7 million. And that's essentially like what we use like to be able to pre-fund like all these transactions. Like we're actually in discussions right now for something that's 10x larger.
Wow.
That's going to help us do hundreds of millions of dollars of volume like on a monthly basis. So like as I said, hopefully in the next few months like we can have this podcast again and I can be like a little bit more open.
Yeah, for sure. So for you, I guess that is the what do we call it? Limiting factor is liquidity. You've got to be able to continuously bring in this liquidity in order to be able to fund all of these bits and pieces.
Correct.
So that's, I guess, your job every day is making sure that can happen.
It's my biggest headache.
Yeah, I bet. Yeah. So I guess then going back to like kind of when you started MANSA, like what was it that, we talked about the trigger point, you got into kind of crypto Web3 kind of accidentally as it were, but what made you go, this is the billion-dollar company here, this is the solving of the problem, this is the thing I need to put everything into?
Yeah, so actually, like when I first started MANSA, like it wasn't payments focused. Like we were actually So my thesis, and I think like the thesis is still kind of holds, is that when you look at the last cycle, right? You had projects like Luna, and you had other, like all these like crypto lending platforms, like they were offering you 20% yield. But it was basically garbage yield, right? Yeah. And as somebody like who's coming from finance, if you don't know where the yield is coming from, then you are the yield, right? So so that showed me that there was, and these protocols had billions of dollars in it, right? So that showed me that there was a need for real yielding products that there was essentially huge demand for. And on the other side, right, especially purely like when you look at like emerging markets, one of the essentially biggest bottleneck to economic development, and this is not only Africa, this is Southeast Asia, this is Latin America, is the lack of financing, right? I think, right, like there's a gap of a few $1 trillion, right? So initially, like we started doing trade finance, but trade finance like doesn't really scale. It's difficult to scale. I mean, like you could have the Houthis block the Red Sea, and then what do you do, right? Then you're technically in default, right?
Yeah,
if the ships don't arrive, then you're technically in default. I mean, this is something that's completely like beyond your control, right? So then like that wasn't it, right? And then I just like started reading more, and then I just started thinking about payments. Right, and that is when the light bulb moment came, because as I started speaking to like more and more fintechs, and like as I started like realizing that this is the biggest issue that most payment companies face, and you know, like Mark Andreessen said, you must always do the hard things first, right? So we like decided to just purely just like focus on that. I believe it was last year, February or March, that we completely pivoted into payments, and the like rest is history, as I say.
I was going to say, never look back since, by the sounds of it. So for you then, you know, you're working with fintechs, you're working with payment providers. So all your customers effectively, you know, are a kind of Revolut or someone like that, right? Where they are needing to move money around. So how do you know, Revolut's are probably a bad example because they are quite crypto savvy and they have that element. But how do you find dealing with these people? Is it because they're naturally fintech, they naturally kind of understand crypto blockchain and therefore they get it? Or is it still a learning curve for these people? Do they still need to be kind of sold on the idea? Like, how do you find that part?
No, I think you'd be surprised that there's some of the largest payment companies have been using stablecoins in the back end for the past few years and just haven't said so. But like because of things like the Genius Act and stuff, right? Everybody now like wants to use stablecoins, especially if you transact with emerging markets. It's impossible to avoid stablecoins, right? And it's illogical not to use stablecoins, especially if you are, you know, for example, if you take the Naira that has devalued 300% against the dollar in the past few years, or you take the peso that has devalued, like 500%, right? How are you going to send money back and forth? Stablecoins are the only way. And then on top of that, you add capital controls. On top of that, you also add a lack of fiat dollars in the ground, right? So if I'm a business that, number one, has to pay for my goods in dollars, like in Nigeria, for example, which is very import heavy, I cannot get enough dollars from the bank. That brings me to the black market. And the black market rates, and that's why like you see like a lot of parallel markets in many of these emerging markets where you have the central bank, they set the rate, but the real rate is actually in the parallel market. So how do people like get above, like get beyond that? Is through stable coins, right? And by using stable coins, you're not limited by, let's say, an arbitrary number, the like 100 million in fiat dollars that's in circulation, but by the $300 billion that's on chain. So it's so much more quicker, and it's so much more easier as well to conduct business like that as a business, and then payment companies follow suit, right? And I think like you'd be quite surprised like if you go to many markets in Nigeria and you just walk around and then you see a lot of them will ask for like USDT, especially USDT on chain.
Do you know it's super interesting as well? Because I heard Nigeria, for example, they've got 3 rates. They've got like the black market rate, the like bank rate, and then maybe the central bank rate is different to what the banks charge, because the banks are charging X amount on top of the central bank rate to make their spread because they can, and then the black market rates, you know, different again, and the numbers like, and the discrepancy, this was a year or so ago when I was looking at this, but the discrepancy was like nearly double what the black market rate was and what the central bank rate was, which is insane really when you think about that. And a colleague of ours, a previous colleague of ours, he grew up in Zimbabwe, and he's got a note on his, or he did have a note on his desk that was like 1 billion Zimbabwe, whatever, and it was like worth like 2 cents or whatever, you know, and it's like, that is not a sustainable currency. That's not how you, how you can operate, right? So I completely get it. So you find that a lot of these fintechs are already kind of in the kind of blockchain stablecoin space when you're talking to them, but they need a partner like you to really scale their operations. And
Exactly.
So that makes your job a little bit easier than when you're talking to these fintechs because they kind of get the conversation.
Correct. So like now it's up to MANSA to be able to build that infrastructure where they can easily go from their Naira to the USDT, and then they can go from the USDT to the Euro, and then vice versa, right? So like this is what MANSA like is focused on building. Right now we mainly do liquidity, but we are going to start doing on and off ramp. We're going to start doing the settlement. We're going to start doing the FX, and so like we are building a one-stop infrastructure, like a full stack payments infrastructure, where payment companies can be able to do everything on chain, everything through stable coins, and we abstract everything.
And so going back to the usage here. Yeah. So I'm a payment provider. You're obviously MANSA. We deal, as the payment provider, I know that stablecoins are involved and I have to interact with stablecoins myself in order to deliver this. But as a customer over here in Zimbabwe, he's got no idea whether I'm using stablecoins to settle these transactions. So the fintech and MANSA have to have that stablecoin fiat relationship, but the consumer has no idea, as far as he's concerned, doesn't care because he's getting cheaper rates and quicker money.
Exactly.
Yeah,
exactly.
Okay. Which is super. Like, I mean, that is the way to scale, right? Where you don't need the average user to know exactly, what's going on, because that's when you have to educate everybody, and it becomes super difficult. So, how for you? Do you think things like, regulation as a concept, do you think that now is helping you? The fact that Trump, for example, has come out and put this Genius bill in play, the fact that MiCA have come out and clarified in Europe what you need to do, and the FCA, I know directly are talking to companies in the UK around how they manage stablecoin infrastructure. Do you feel like now that is really giving you guys a real solid base to go, we now know how we can operate, we know the rules of engagement and all these sorts of things, and therefore companies are able to understand that and therefore be trusting in this technology? 100%. That must be helpful for you.
Yeah, 100%. It's made things a lot more easier, because previously a lot of companies were like, yeah, we want to use stablecoins, but like my bank is gonna block me. This is gonna happen. But now that things are absolutely clear, and you have clear guidelines, you have clear regulations and everything, it just makes things it has made our job so much easier, and it has made our clients and future potential clients a lot more comfortable as well, right? Because now when the regulator says using stablecoins is not an issue, then our banks won't block your payment if it's coming from an exchange, or if it's coming from on and off, because that's what previously was happening, right? Is I'm not too sure if you've heard of Operation Choke Point 2.0, right? Where essentially the whole industry got debanked, right? I have personally experienced getting my HSBC shut down in Hong Kong because I did a crypto transaction of less than $10,000.
We had it as a business,
right? It's ridiculous, right? And my money is still stuck in Hong Kong, right? And I'm moving tens of millions of dollars every single day, right?
Yeah.
What happens if my money gets stuck?
Yeah.
So,
and that's that is a problem, and that for you as a business moving that level of money, you've got to know that.
Sure is.
I think as well the other thing, and I'm not an expert on payment infrastructure, but from what I understand, a lot of these fintechs that try and implement crypto and blockchain and whatnot, their correspondent banks are typically US banks, or typically US dollar based banks or infrastructure. And if those guys say no, they can't do it because they lose their whole infrastructure. So I think for me, seeing Genius come out and giving opportunities for stablecoin companies in the US to actually start to have proper kind of regulated options means that those payment providers, those banks, whoever are providing those US dollar lines are much more comfortable and will go, do you know what, we won't block this whole account down because of this crypto, because we get it now.
Exactly.
That I hope is the goal, but I guess we're still working towards that.
Hopefully. I mean, when the president of the United States launches his own meme coin, and when his son is basically launching his own SPACs, focus on crypto and everything, right? That's the clearest green light that we have, right?
Yeah, I mean it's an interesting battleground though now, I guess, for the US with what they're doing and the Trump family are doing. I mean, don't get me wrong, I think some of that is admirable, that they are coming out as a world leading political kind of party, or whatever you want to call it, political group, whatever you want to call it, and really championing in this, because El Salvador can champion it, fine. An African country can champion it, fine. Even the UAE could champion it, fine. but it needs the US
Correct.
or China or someone like that to probably the US though really to go, we are in on this, we believe in it, and we're here. Because without someone like that sign off, everyone else is like puppets, right? The US says move, everyone moves. The US says don't move, everyone says so. So it really needs that. And so I'm as a crypto person, as a blockchain business, you know, all that sort of stuff, I'm super excited for what the world might look like in 3-4 years when we start to bring in all of this technology that I guess the likes of you and I have seen for a long time.
Yeah.
So moving on then to, I guess, the future, right?
Yeah.
So I guess a couple of things. Firstly, for you guys, where do you see MANSA? Like, what is the, not I hate when people say what's the goal, right? Because the goal is changes all the time. But for you, where do you see the next 2-3 years of MANSA? What are you trying to achieve?
I mean, like, I see MANSA as the primary infrastructure that fintechs in emerging markets can use to go from local currency to stable coins, can get liquidity for their payments, can do the effects on their payments, can get their payments settled anywhere, like across the world, all through one seamless API.
Yeah.
Right. Okay. Yeah, you know, and I want us to be the primary conduit through like which this happens. So like, God willing, it will.
Yeah, amazing. No doubt. And so then the space more general. How do you see this space developing, evolving? Like the challenges you think you might come across as you scale your business? How do you see that moving?
I feel like, like I feel like the space is developing incredibly quickly, but I still think that we're very early. I think how much was stablecoin payments last year was, I don't know how much, like 2 trillion or something.
Okay.
Like there's $2 trillion of normal payments that happens every single day, right? Or even more. There's trillions of dollars of normal payments every single day. So we're not.
So the growth is insane.
Exactly. We're not even 1% of the way, right? So like I think we're still like incredibly very early, right? And if you assume if your thesis is that payments are going on chain, then we must have the necessary infrastructure to support that, right? So this is like what we're building, and I think for us it's not really. Like I wouldn't say any challenges necessarily like head on. We're just focused on building great infrastructure, supporting great businesses, and making lives for people in emerging markets better.
Yeah, and I think that's an amazing kind of mantra, if you like to have, is that for you a roadblock is it's not a roadblock, it's a speed bump, right? It might slow you down a little bit, but you'll get over it, you'll move on, and you'll be a better business for it. And as long as your end goal is supporting the end user and making sure that they can move money freely and cheaper and things, then ultimately you're probably going to win, right? Because that's what we all want. So I guess finally then, emerging markets for you, the markets are the Africa, the South America. Do you see any other kind of markets that for you are really kind of areas that you want to go after that you think are underserved at the moment?
India. I think India is incredibly underserved. I think Pakistan is incredibly underserved. I've been to India 6 times. I love India. I love Indian food.
I've never been.
You should. It's amazing. Mumbai, like it's amazing. It's so chaotic, but I think there's so much beauty in that chaos, right? And it's the same thing with places like Vietnam. The same thing with places like Indonesia and everywhere in like essentially Southeast Asia, right? So I think that like emerging markets are the true use case for like crypto, and I think I feel incredibly fortunate. I feel incredibly humbled, to be able to play like a very small part in it.
Yeah, no, super excited. So, Mouloukou, thank you so much for coming on and giving me the time today. I've certainly found this fascinating, and I'm sure the viewers have as well. So, if people want to hear more about you or see more, we can link stuff obviously in the show notes, but maybe tell people where they can find you on MANSA.
Yes, you can find me on Twitter at Mansa_MLK. MANSA, you can find us on LinkedIn, on Twitter, and anywhere else. Thank you so much for your time.
Amazing, thank you.
I really appreciate your time.
Yeah, thank you so much.
Thank you.
I want to also thank Web3 TV for letting us take the studio today as well. So thank you guys.
Shout out Web3 TV.